but let's shift the spotlight back to earnings then. And it was a strong set of numbers from BPCL for the quarter gone by. The company announced bonus shares as well as dividend for the shareholders. Somit is standing by with all the number crunching. Somit?
Well, BPCL in the fourth quarter, if you see, has reported a strong set of numbers. Revenue, though, were up just 1%, but if you see the EBITDA growth, that was nearly 48% on a sequential basis. Net profit was up 24%, but that was impacted by a one-off of close to around 1,800 crore rupees owing to an impairment of investments done in one of its subsidiary. If we remove this one-off, then the net profit growth was nearly 64% on a sequential basis. The company also announced a bonus issue of around one free share for every one held, that is 1:1 ratio, and also the dividend amount was around 21 rupees per share, which translates into a dividend yield of close to 3.5% currently. Now the crude throughput, that was up around 5% on a sequential basis, while the marketing volumes were also up around 6% on a sequential basis. Now sequentially the numbers were good because of a better marketing performance, which also partly offset the weakness that we had seen in the refining business. Refining business was weak because the gross refining margins, or the Singapore gross refining margins, were weak on a sequential basis, while the marketing segment performance was stronger on the back of higher gross marketing margin. Now if you compare BPCL's performance with its peers like Indian Oil Corporation and HPCL, it has reported the best number in the fourth quarter of FY24, because if you see, it was the only company which has managed to beat the analyst estimates in the fourth quarter. Its numbers were around 2% higher compared to what the street was expecting. As against that, Indian Oil Corporation's number were nearly 33% lower compared to analyst estimates, while HPCL's EBITDA number was nearly 6% lower compared to what the street was estimating. On the GRM front, BPCL has reported the highest GRM at around $12.5 per barrel. Its year-on-year change in debt was also the most. Its debt has come down by nearly 48% compared to FY23. And also, if you look at the company's valuation, that is the only oil marketing company trading below its historical average. If you see the 12-month forward valuations of EV to EBITDA of BPCL, it's at around 6.4 times, while its historical average stands at close to 8 times. So BPCL has outperformed its peer in the fourth quarter of FY24.
Alright, Swami, thanks so much for taking us through that. All eyes will be on BPCL on the back of that news flow.
If you like this video, then like, share and subscribe to ET Now.